All right, Blake here, Forex Money Flipper with 10 Talents Trading. Today, I've got the board ready to go, and the title of this video is Definition of a Sniper. Obviously, we're talking about trading. We're just using the parallels. You know, Jesus a lot of times would do parables and relate it to common things and that. So, you know, we're doing that today. Now, and also too, you know, my dad was Airborne Ranger and stuff. So, I mean, I just kind of that mentality, you know, growing up. But anyway, definition of a sniper. Okay. So, number one, a sniper trains until he cannot get it wrong. Now, I capitalize he because I believe that women should not be in combat roles. Take it for what it is, but trains until he cannot get it wrong. So familiarity to the point of just, you know, not having to think about it, right? So I know that sometimes when a soldier gets deployed, they have different equipment that they may get issued upon arrival, and they can get familiar with that. And in certain circumstances, situations where they might have to use different weapons, different weaponry, maybe a different rifle or something happens and stuff. And so you may not always, you know, get the weapon that you want, right? But whatever you're using, right, you ought to be at least familiar with that weapon system, or you know, in general, obviously, you know, you're familiar with all the moving parts, and you know, okay, I can field strip this weapon and fix this thing or whatever I've got to do, clean it, keep it in good working order. Familiarity with all the equipment, not just the weapon, but also to, like, if they're using night vision or maps and compass or GPS and whatever the equipment that they're using, all of it, all of their kit, their medical, whatever, all their training, they're, you know, to train until the point of where they cannot get it wrong. So they could basically be tired, sleepy, hungry, angry, just half awake, and still perform the job. In other words, you know, like if shit goes sideways, and you know, they say no contact or no plan survives first contact with the enemy, right? And talk about, well, when the, you know, when, like on Black Hawk Down, right, where Hoot says, you know, when the bullets start flying, all that shit just goes right out the window, you know. And so he you know, I don't know if the original guy said that or not, but it was a great line in the movie, you know. One of my favorites and stuff. So, you know, you gotta love Delta Force, right? God bless them. God bless them. And but anyways, the point what I'm trying to say is, you know, this is how we have to be with our tools, right? So if you're using MetaTrader, or if you're using TradingView or whatever platform, whatever software, you know, you've got it set up. Like for me on my TradingView, I've got all my key levels, all my quarters theory levels set up on there. I know I have an extensive familiarity, and there's more I could learn, and I'm like always, you know, could put more time into it. But like, you know, just being familiar with, like, okay, what does every little thing do that's on this interface? Like, do you know what all the little buttons do? Do you know what all the settings are? Like, you know, the familiarity with your equipment, even your laptop, being able to use it efficiently, or whatever your trade desk or your trade setup, or your phone or your iPad or whatever you're trading off of, familiarity with your equipment, you know. Does my mouse have the battery, you know, charged so that it doesn't go dead in the middle of a trade when I'm in the hot seat and price is moving and it's, you know, 10 o'clock in the morning and Wall Street is going ham on NASDAQ or gold or whatever's happening, you know. It can get heated in that moment. And so you need to be, you know, completely intimately familiar with all of your tools, everything. You know, do you have, you know, water to stay hydrated? Do you have your coffee? Like if you had everything set up, right? So that kind of gets to step two, or the second point in this. But anyway, just yeah, training, training, training. So back testing, back testing, back testing, back testing, back testing. You know, until you just have seen it 100 times. You know, the same setup. You know, so back testing for, you know, just your free time, right? Like that is our training. That is, you know, and I know I'm using sniper, but I mean, you could use anything. An Olympian, right? You know, we see them at their best on their best day doing the Olympics once every 4 years. And, you know, but they've been training every day or every other day or, you know, multiple times a week, every single week for years, decades, you know, to get that level of skill. And so back testing really is also, you know, forward testing is just as important, if not more, because that gives us kind of like, you know, the ability to really test, you know. So it's kind of like, you know, in the military, they do training, right? And then they go out and they'll do, you know, well, I mean, obviously they go to they go to combat, right? But you know, maybe that first mission or whatever, um, you know, maybe I don't know. They have a progression, right? So there's basic training and then advanced training, and stuff like that. But for us, you know, back testing, um, I'm trying to relate that to forward live testing. So what that would be, you know, there is a little gap there between military because they only have like training and then live, whereas we have live demo and live real money. So for us, we get a little bit of, you know, it would almost be like if a soldier could go, or a Marine or a service member, a war fighter could go to war, and with, you know, where it was like the enemy was real, but they were, you know, shooting blanks. That doesn't happen, but obviously, but that's kind of like our demo. We sort of have that luxury of being able to forward trade, test our metal without risking, you know, our money, right? So for us, we have that advantage, and so let's take advantage of it. But yeah, back testing, you know, that you can relate it to basketball. You know, Michael Jordan and how much he trained and prepared and stuck to the basics. You know, a lot of stories about Michael Jordan. I'm not an expert, or way, way, way far not. But I just use that as an analogy because, you know, he's one of the greatest of all time. But like, he was also described as one of the most humble, even though he looked arrogant, he was like described as being very humble, always listened to everybody to see what he could learn. They say the same thing about Jeff Bezos, that he walks around with a notepad or in his phone. He's always taking notes from what other people say. He's trying to listen to see if he can learn something from someone, no matter who it is, right? So never wasting time there. But yeah, so for us, let me just back up and just kind of, I know I'm repeating myself a little bit, but yeah, so back testing, forward testing, and that's our training. So in other words, when we get to our live demo trading, we should already be at the point of proficiency where, you know, we've seen it so many times that we can just do it. And then that's kind of like practice, right? To make sure and kind of test our metal and kind of test to make sure we really can do it for real. And then obviously live testing, start small risk, but once you start, you know, now with the funded account, there is a time factor where they have you pay monthly, and so you do kind of, you know, need to sort of establish a plan with that, and that's a different video. But to make sure that you meet that goal within that first month, you know. And so you have to sort of say, well, what does my risk need to be? What's my win ratio? And the way you find that out is through back testing, right? Collecting data, and stuff like that. Even though I don't track my data in a spreadsheet, even though I have a spreadsheet I made for it, and I should, and that's something I should do, but I just don't. I'm just being honest. All right, so trains until he cannot get it wrong. Okay. Number 2 has TTP, tactics, techniques, and procedures. Tactics, techniques, and procedures. So has TTP, a plan, has tactics, techniques, and procedures, a plan, contingency plans, and rules of engagement. So tactics, techniques, and procedures. It's just like all the little stuff that you do when you're calculating what is the average daily range for today. So you take the average true range on the daily and then chart, and then that's how you find the average true range. And so you just know, you go to your daily chart, you check it, average true range, and you know that's your average daily range. So you can go back to the 5-minute chart or the 15-minute chart or whatever you're using. You can say, okay, now I know, even though I'm on the 5-minute chart and the 15-minute chart, now I know the average daily range because I checked the average true range on the daily chart. So that's part of tactics, techniques, and procedures, kind of what I'm talking about. So, seeing what your entry might be, if you see a setup, and then looking at, well, what's my risk going to be, calculating that to say how many, for example, if it's futures that you're trading like NASDAQ, S&P 500, or even gold futures or whatever, with a prop firm on TradingView, then you're going to be trading like a certain number of contracts, right? And I'm not an expert on that, and I'm not going to pretend to be because I haven't been doing it in a while. I did trade a little bit of those type stuffs a couple of years ago, or a couple of years ago. I took some time off, but recently I've just been trading cash. But now I'm transitioning back into I'm trying to hurry, but I don't want to rush. Prop firms. So, but anyways, what was I saying? Yeah, and so just setting your stop loss and take profit and what that would look like, or your trailing stop loss, setting up your risk. How many contracts am I gonna? That's what I was gonna say. How many contracts am I gonna be taking on this trade or whatever? Like those are all your tactics, techniques, and procedures. Like trailing stop loss and managing all that, and that's all. Like I said, TTP, stuff like that. So the whole process of actually physically trading. What is your techniques? What are your tactics? What's your techniques and what's your procedures, right? SOP, standard operating procedures, very important in the military and in trading. I was never in the military. Let me be clear about that. I was medically disqualified. It is what it is. So I was gonna be a Marine. Simplify, hoorah. But anyways, gotta love our devil dogs. But all right. Well, anyways, so a plan. Now, a plan is like, okay, I'm gonna risk no more than 3%, and then if I lose a trade, I'm gonna go bump it down to 2%, and then if I lose that trade, I'm gonna bump it down to 1% until I make back half of my drawdown, or whatever your plan is. That's your plan, right? I'm only gonna enter a trade after liquidity gets taken, or after I see an expansion, or what do they call different people call different things, expansion, where it just goes real quick, real fast, real strong. I sound like an idiot a little bit. Sorry, I apologize about that. But when you're standing in front of a camera, sometimes that happens. But a lot of people will, anyways, maybe you know what I'm saying. But so your rules. You're saying, okay, after it does this, then I'm gonna wait for this, and then I'm gonna wait for confirmation, and then I'm gonna enter at this risk and whatever, and if I lose X amount for the day, I'm done. Now with like Tradeify, and I think even like Apex as well, the rules are not a lot of rules at all. Pretty much the only rule is you have to close your trades by like 4:30, and you have to you can't lose like more than $4,500. That's trailing, so that's from the max of your all-time high equity. So, but a plan, that's what a plan is. So knowing that this is what I'm going to do is, by the way, the same plan that you execute in back testing. So step one, we're executing TTP, tactics, techniques, and procedures, a plan, okay, and then contingency plans. So, if the market doesn't do what I expect, right? So there's like a lot of situations where, like let's say the market is going up and then you expect it to bounce off of an order block, right? So if that market does not bounce off, or if it bounces off a little bit and then comes back, stops you out, now your contingency plan kicks in. So if you risk 3% on that, back to the plan, you could say, well, okay, now I'm going to risk 2%. And then contingency plan says that I'm going to wait for it to retrace back to the breaker block, which was the old order block, which would now be a breaker block. And then I'm going to short it for 2% or something like that. And then, if it doesn't respect the breaker block and it breaks back above and everything's just fucked up, and I don't know what the hell's going on, and I'm getting confused and it's all chaos, and now I'm like getting don't know what to do. Maybe part of your contingency plan is you don't do anything anymore. It didn't do anything you expected. It's fucking with everyone, and now it's time to just like go do something else, or go try to trade a different instrument, or just sit on your hands. One of the things that a sniper does is nothing, right? So one of the most important things that a sniper does is nothing, and that would be waiting, watching, confirming. But honestly, if and I know that there's like support roles for snipers where they're supporting the infantry on the ground, so they're just killing all the bad guys, but there's also like specialty missions where they're going after high value targets and stuff. So in this situation comparison, we're thinking more along the lines of HVT, high value target. So basically, if your setup doesn't occur, then if you miss a couple of them, then maybe you don't know what's going on, so maybe you don't do anything anymore. Maybe you just stop trading for that day or whatever. Or maybe one of your contingency plans is that if you lose 2 trades in a row, you just stop and you watch the market and you see like what is it doing, like but you're not trying to place a trade. You're simply observing, right? Observing. I didn't put that on here, but that is one of the key fundamentals of basically a sniper, right? Observation. And I don't even know where I should put it on here. I don't know where I should put it on here, but it's basically very important. So observation. Maybe I'll put it right here. Observation. Okay, there you go. Squeeze that in there. Okay. But yeah, so maybe that's what you do with your contingency plan, and then your rules of engagement. That's like everything I've been talking about, kind of. It's really, I guess you could say, it's just like if your rules of engagement would be more like if I lose a trade, okay, now if I start with 3%, I lose that. Now I know I already said this like 2 or 3 times, but I'm saying it again as it pertains to this. If I risk 3%, I lose, and I go to 2%, and then if I lose that, I go to 1%. Now I personally don't do that because I can't, because I'm just honestly not like an automaton or what is the definition of like, I'm just not like a robot. I'm not like I don't have that much self-control and discipline to be like, yeah, I'm gonna do that. Even it's just like my tendency is to double down, which is one of my bad habits, right? Over leveraging. So I find that very difficult to do. There's pretty much almost basically nothing more difficult to do for me, in my opinion. It might be the most difficult thing is to like reduce my risk. But now I will say this: once you get in a trade and if it starts going in your direction, that's where, like, if it starts making, like, you say you're buying and then it starts making higher highs and creating structure above your entry, that's where you can start trailing your stop loss. And I mentioned that in the last video. So that is also probably rules of engagement as well. You know, what are you going to do in the heat of the battle during the trade? You know, what are you going to do if things start getting too crazy and you don't know what's going on, and you know, it's just, it turns into chaos, and the entry that you thought was going to be good is not, so you didn't end up taking it because it was looking too hot coming down or whatever's going on. You have to think like, okay, you know, if I'm, what am I going to do? What am I going to do? Am I going to trust my back testing that I've done the same thing hundreds and hundreds of times? That's probably the right thing to do. That's what, you know, probably the sniper does, right? They train, and then they just trust their training. Obviously, there's intuition, there's observation, there's situational awareness, there's everything like that. But at the end of the day, you have to trust your training. Obviously, there's a lot more that goes into being a sniper. I'm not saying I'm an expert. I'm just simply making a video about trading. But you know, they have, you know, higher command, which I guess would be like, for me, you know, I should have a mentor or mentors, but I don't, because I can't afford them because they all charge money. Because I'm just a startup, you know, things is tough, bro, you know, and you trying to get started, you trying to, on a shoestring budget, do what you can do, you know. So, but so I don't have like a command structure, as they say in the military. But you know, it's just me, basically. It's just me, solo, you know, and everything like that. So I kind of like the sniper analogy because they're kind of alone. They have a spotter. I don't have a spotter, but you get my point. So, anyways, all right. So, kind of covered the second one here. Thirdly, typically they have one high value target. I know I touched on that earlier. So one high value target, maybe more. So there's one guy that they're after, but if they, you know, typically they don't take a second shot if they're in that sort of situation, obviously. But like I said, sometimes it's more of a support role. So maybe they're trying to target, you know, higher value targets if they see someone who's like, looks like they might be the leader, or they're you know, maybe the bomb maker or something, so they're going to target that one. You know, there's certain times where they're going to target specific, you know, if they have the choice, you know, probably they're going to shoot and kill whatever they can, I guess, sometimes, if they're in a support role. But you know, at the same time, you know, you want to be careful about your position. So every time you fire, depending on your concealment in a home or whatever, or building or whatever it is, you know, you may or may not give away your position depending on if obviously the weapon's suppressed or whatever in that situation. But you know, obviously a sniper's not just going to want to sit there and just give away their positions. So they're kind of going to be a little bit probably selective, is kind of my point. And that's what we need to be as traders, is selective, right? And that's my whole point. Okay, so that's what I'm saying with this. Typically they have one high value target, maybe more, and that's number 3. So for us, you know, we need to be having that mindset of, I'm not here to take every pip out of the market. I'm not here to get every tick. I'm not here to take every trade. I'm looking for the big kahuna or two in a certain window. Usually, you know, I guess you could just say, probably the biggest, I would say, window is, I would say, and I'm not, like I said, I'm not an expert on NASDAQ or S&P or even gold. But, you know, well, gold's a little different. But I would say with the futures, like specifically NASDAQ and S&P, from what I know. Now, I know that they move all the time, and I've seen huge moves, you know, away from New York. But there's no denying the volume and the decisiveness that of the moves that happen in this in at between I would say 7 a.m. and maybe 11 a.m., something like that. So that's kind of like, if you can think of like your window of opportunity that you're just looking to get in, get out. And so that's kind of what I'm looking for. I'm looking for those big quick trades. Usually it's like one trade a day, unless you take internal and external on the same day, and then that's when you're going to get hit with like a good trade, hopefully, and then an even bigger trade if the internal liquidity gets initiates the trade, and then the external liquidity gets taken and initiates another even bigger move usually. So in that case, you would be taking two. But my point is, I'm not there, going to be watching the chart 24 hours a day, 7 days a week, 365 days a year, trying to get every single tick. I'm just going to show up, like around 7 o'clock in the morning, maybe 5 o'clock if I'm feeling froggy, and then, probably stay till around, well, I would say, now with prop firms, I mean, you got to be out by 4:30, but, you should be probably most times out of your first trade by noon. And then maybe you're still, maybe the timing doesn't quite line up, so you're still in the trade, and then you can get out afternoon by 3 o'clock or something, before people start dumping closer to the close, if that happens. Sometimes it doesn't. Sometimes it keeps running. The point is, you're only looking for like one or two trades a day. That's it. Usually just one trade a day. So that's kind of the mindset of what I'm saying. Typically one high value target. That's us. That's me. At least me. So I don't know what you're doing, but I'm talking about this. If you're going to be a sniper in trading, right, then you got to think about just one banger a day. Just need one banger a day. One good setup a day. That's all I need. And then we'll get to step 5 later, okay? Because after you get your high value target, then we know what the sniper does. They leave. But we're gonna go to number 4 real quick. The sniper is patient, waits, watches, and confirms. Right. So observation. The sniper is patient, waits, watches, and confirms. Okay, what does that mean? Well, it means they're patient, so they're not eager. Okay, they're just waiting, watching, and they get confirmation. So they confirm this is the target. This is basically, for us, this is the setup. So whatever your confluences are that you're looking for, maybe there was a liquidity sweep, and then my hat get fucked up. I think I might have fucked it up. I throw this thing around all the time, which is kind of stupid. There, I fixed it. But anyways, yeah. So like, did a liquidity get swept? Did it tap into an order block, fair value gap, breaker block, all this stuff that we talk about? Is it in premium or discount? If I'm buying or selling, if I'm buying, I want it to be in discount. If I'm selling, I want it to be in premium. And then I'm looking for, my confirmations and stuff. And that's like, that's like the observation, right? We're looking for that high value target. We're waiting, watching, and we're confirming. And so we get all these confirmations. Confirmations could be, a lot of times, just as simple as like an engulfing candle, or like, what do you call, like those expansions that you get, and then a retrace. If you look on the, sometimes you can go down on this 15 second, or the 5 second, or even the 1 second, sometimes, and see that kind of stuff. But now, right here, executes with surgical precision. So what does that mean? Well, it's self-explanatory, but basically, yeah. So we're not just willy-nilly, just kind of sloppily entering a trade. We are looking for the Obviously this is the battle that is fought within the trader, where it's like, you don't want to miss out on the move, but you want to wait for acceptable risk. And this is where training comes in. This is where back testing comes in. This is where knowing, like, okay, most of the time, 75% of the time or more, you know, this is what I do, this is what I see, this is what I expect. It usually taps the fair value gap. By the way, always look for the highest time frame fair value gap that you can find. So scroll through, click through all the time frames that are relevant to that little piece of price action. Start on the highest, and if it's just like one 1 hour candle, then you go to the 30-minute. If it's two, then you go to the 15-minute. If that's three, now you can find your fair value gap, and that's usually the one that the market will respect, because it's the strongest one algorithmically, or just like whatever in the conscience of the traders, or just the market fact of it is like the strongest, because it's like highest time frame fair value gap, right? So figure out what that is, and then mark it, and then wait for it. So but surgical precision, and then just knowing, okay, well, I'm going to place my stop just on the other side of that fair value gap, and if I get stopped out and it just spikes through there, well, then now I'm going to execute my contingency plan of, if I was risking 3%, now I'm just going to like re-enter at 2%, and then I'm just going to like take partials sooner, or just whatever, to kind of cover the that little bit of drawdown that I suffered from losing the 3% trade. So if you get a 2% trade, and then you get if it goes 2R, 1 to 2 risk to reward ratio, and you close like what I'm saying, like whatever if you close half of that, then that's going to be not quite. So I'm not doing the math in my head right now, because I'm kind of getting sleepy, because it's like really late. But the point is, you're going to want to recover at least some of that drawdown, if not all of it. So sometimes it's probably a really great idea just to, let it run a little bit, and maybe take a little bit of profit and just close the whole thing at whatever, like 1 to 2 or whatever. And like I said, well, I didn't say this, but actually smaller trades are more higher percentage, right? So if you're trying to get a 1 to 10 every time, like I have been trying to do for the last 3 months, you're gonna lose a lot. You're gonna lose a lot. You're gonna give the market back a lot of your money, unless you're taking partials. That's a whole other thing. If you're taking 1 to 2s, you probably are just gonna want to do mostly full closes. But at the same time, if you do take significant amount of drawdown, sometimes you could just take a 1 to 1 and be happy with that, and say, okay, I got my last stop loss back. Okay, now let me just wait for the next trade, or wait for the next entry, and just like, and sometimes that's the best way to go, rather than trying to wait for the full extension and then maybe not getting it or whatever, because we're not always right, and we can't sit there and pretend that we're always going to be right, because that would be insane. Because obviously, if you spend any time trading, that most traders are not always right. So anyways, so patient, waits, watches, confirms, so that's observation. But then when it's time to go, and it's go time, they execute with surgical precision. And I guess that could have been a separate one, really, probably, maybe like number 5, and then this number 6. But it's, I guess I could do that real quick. 5, that sucks. And then 6. Okay, well, there you go. So executes with surgical precision, number 5. And then number 6, clean, exfil, escapes and evades, RTB, return to base, Um, but clean exfil. So what does that mean? So it means usually, and you can look at the higher time frame and see, are we close to liquidity? Do I think liquidity is going to get hit before the end of the day? If so, depending on when it gets hit, if it's enough time before the end of the day, you might look for another entry. You might get a little bit of the piece of the pie. Obviously, because with these prop firms like Tradeify and Apex, you can't hold after 5, so you have to. But if you can get in around noon or maybe a little bit after, in other words, if the liquidity is swept around noonish or maybe a little bit later, then you probably could get a little piece of that action before 5. In other words, like today, for example, if you go look at the chart, look at whatever today is, and then go look at Nasdaq. It did exactly that. It swept sell side liquidity, and then it shot up. It was like afternoon that happened. So that's kind of, I'm using that actual specific example. But the point is, usually, like I said, unless you expect external liquidity to be swept that day, usually you're going to get like one good clean move. Usually, in Nasdaq, it's 1 to 2, maybe 1 to 3 if you want to push it, or 1 to 2.5, 1 to 2.5, something like that. That's all you need. If you're risking 300 and you get 1 to 2 risk to reward, obviously that's $600 in the bank. So that's a lot of money for somebody like me that doesn't have much money. Okay, so what my point is whatever that is for you, whatever like a good day is for you, like for me, 500-ish is a good day. Profit net. Okay, so whatever that is, if you don't think that there's going to be really probably another clean setup, like I said, I know I said it like 4 or 5 times already, but if you don't think external liquidity is going to be swept or whatever, then you just take your one trade and then you exfil. Make a clean exfil after you trade and you're done. And it's so there's your choice. But my point is that I used to hang around. Kind of like when you get off work and you're not getting paid anymore. You don't just hang around the job. Maybe you hang around for a few minutes and you talk to some people and whatever and stuff, and that's fine. And some people, maybe they hang out at their jobs. I don't know. But I know a lot of people, it's like, 5 o'clock quitting time, and go home, or go wherever. Leave work, leave the job site. And that's kind of the same thing. Now, there is a lot of money to be made. There is a lot of money to be made for the individual who can keep track of the market, observe the market without feeling necessary to trade. That would be, I guess, like, maybe the sniper leaves the hide, but they have, they still have satellite, live satellite or whatever that they can see what's going on the ground, for example. And they don't necessarily have to be there, but if situation develops where it's a juicy opportunity, HVT or something, they can send the sniper back out into a different hide or the same one, I guess, depending, and basically whatever they call it. Final firing position, I guess, FFP. But my point is that it's totally okay, and matter of fact, it's really preferred, probably especially early on, I would say, to just like hit your banger and be done and be done, right? Get your paycheck and go home. Leave the job site, right? Or if you're a sniper, leave your final firing position, exfil, escape and evade, and return to base. Come back, clean your weapon, you know, make your notes, after action review and all that. That would be journaling for us traders, and stuff like that. So making your trade, so executing with surgical precision, and then clean exfil, escape and evade, return to base. It's okay to make your trade, hit your lick, and take the win. And by the way, there's a huge psychological thing that can happen where if you get a big win, sometimes it might be better for some individuals at certain times and circumstances and situations to just take the win and leave. Now, if you can, you know, continue to observe the market, you might see another setup and you might be able to make more money, right? Or you might be able to look at a different instrument. Maybe you hit a big lick on NASDAQ, but gold didn't pop off yet. So you close your NASDAQ trade, you look at gold, and you see it looks like it's getting ready to rip and run. Maybe you could take a trade on there. But I'm telling you, if you lose, there's a tendency to tilt. And I don't know, you should know probably what tilt means, right? Well, you know, tilt is like a poker term where in trading, for example, you know, when you lose, sometimes you can want to get that back. And it's worse, I would say, double, triple, quadruply worse, double, triple, or quadruply worse after a win, particularly a big win. So let's say you make $600, you're like, yes, I'm just gonna stop trading and I'm gonna just go, I'm gonna play video games, or I'm gonna go you know, do whatever you do, and I'm gonna go watch TV, I'm gonna go watch YouTube, I'm gonna go watch a movie, I'm gonna go do this, I'm gonna go do that, I made money today, yes sir, I'm gonna go for a walk, whatever, I'm gonna go get something to eat, whatever you're gonna do, you know, wherever you live at, whatever there is to do, I don't know, but you know, you say, yeah, I made a big win, and now I'm gonna celebrate and just feel good about myself and just be happy, and yes, I'm signing off, I'm out of here. And then, you know, you make that mistake, right? You look at you open up, you know, TradingView app on your phone, just to peek. I'm just gonna peek at it. Oh shit, that thing's ripping and running, or whatever. Look at that setup. That's a juicy setup. And what can happen is if you enter and you lose, say $300, that tilt is going to be like 10 times worse. I know I said like double, triple, quadruple times worse, but I mean it's going to be 5 to 10 times worse. I mean it's going to be so bad, because you know, just something about getting a big win and then taking an L. Now, if you can take a loss after taking a big win, man, there's a lot of power in that. A lot of power in that. But man, I'm telling you, it can really cause you to tilt and want to trade more and want to get it in and want to get it back and all that. And look, the fact of the reality of the matter, the fact is, especially with like something like NASDAQ, and you get one chance, one shot, one opportunity to hit the lick, to hit the trade. There's an opening, there's a window, there's a moment in time where, boom, the entry is right there. Boom, that's it. Boom. And usually you just get one chance at that one time, and it's usually, it happens in seconds. Okay, your entry is, boom, it's right there. And if you don't take that trade within a few seconds of it happening, of price getting to that level, price tapping in and confirming or whatever it is you're waiting on, if you don't take the shot like the sniper, guess what? A high value target, he ain't gonna just stand there all day, you know? And you know, so you have to be ready, you gotta be set up. just like a sniper, they prepare and they prepare and they prepare. Not only do they train, but they prepare before they go. They prepare, and I know I said that like a bunch of times, but the point is, there's a famous quote by Abraham Lincoln. If you go to my website, that's fine. You can see the meme on there. It's fine. I only fear God, only alone. But yeah, it's Blake Will, BlakeWills.com. You can go to that one because I was just going to, my identity, go ahead and just reveal it. It's fine. It don't matter. BlakeWills.com. You can see there's a, because, I try to keep it a little bit, don't try to always put it out there like that. But there's a quote by Abraham Lincoln that says, it's basically, if you want me to chop down a tree, I'll spend the first, if you give me 6 hours to chop down a tree, I'll spend the first 3 hours sharpening the axe, And so it's talking about preparation. So being able to prepare and to know, okay, this is my setup, I can see it, there it is, and then to be able to wait for it, that is probably one of the hardest things to do, is to be able to wait for price to come back to your entry, because you think any second it could just rip and run, it could take off. But the fact of the matter is, if you back test, if you train, if you've seen it 100 times, the fact of the matter is the market, it usually, it's definitely going to give you a trade. There's definitely going to be a trade that day, and it's our job to find it, right? But you have to go. When it's go time, you got to go. You got to pull the trigger. But my point is, if you miss that chance, that opportunity, that moment in time, those few seconds where you have to go, and you got to go now, and you got to make that decision, and you got to place that trade right then and right there. If you miss that, and the market starts ripping and running in the direction that you thought it was going to go, that's going to put you on tilt. It's going to put you on tilt bad. And so be careful with that, because next thing you know, and especially it can get real messy. It can get real nasty. It can get real, this is where the self-control and the discipline comes in. You have to have self-control and discipline. And I know I didn't put that up here, but that is like one of the most important things about being a sniper is discipline. I mean, it goes in its own box right here. Discipline. So, and self-control. And go back and watch the last video I did on being stoic and nimble. But yeah, so basically you have to watch out. You have to watch out for that. I mean, you have to accept, if you miss your trade entry, you missed it. That's it. Now you can wait and look for another entry, but I'm telling you right now, you better just learn to accept that you're gonna have, like Eminem said in 8 Mile, one shot, one opportunity in that song that he wrote, whatever it was called, Lose Yourself, right? And that's a great song. It's a great song. I think we can all agree on that. I think everybody in the world could agree that is a great song. It's really a great song. But anyways, that's about it really for y'all, and I appreciate y'all, and hopefully you got something out of this. So just a quick review, definition of a sniper. This is the title of the video, definition of a sniper. I hope you like my reticle. I worked really hard on that. But a sniper trains until he cannot get it wrong, has tactics, techniques, and procedures, a plan, contingency plans, and rules of engagement and discipline, has typically one high-value target, maybe more, is patient, waits, watches, and confirms. Observes, or, you know, is good at observation, right? Observing, okay? That's a big part of being a sniper. So is patient, observes, waits, watches, confirms. Is patient, observes, waits, watches, confirms, and executes with surgical precision. Okay, I made that one its own special, its own special one. So is patient, waits, is patient, observes, waits, watches, confirms, executes with surgical precision, and conducts a clean exfil, escapes, evades, and returns to base. Because it conducts a clean exfil, escapes and evades, and returns to base. So that's it for the video. How long did we go? 51 minutes and 30 seconds as of now. Appreciate your watching. Let me know your thoughts in the comments. Just see if you like this, if you can confirm what I'm saying, if you have experience with this, if you've experienced any of this stuff, if you have any insights or wisdom, stories, any stories that you have that you can say, yeah, that makes sense, and I did that, or you're 100% right, or you're wrong, or you look stupid, or don't say that, because my mom said, if you can't say anything nice, don't say anything at all. But I appreciate you, and pretty much it. So hopefully, if you like the video, I would appreciate it if you gave me a thumbs up. I'm not begging, I'm just saying. If you want more of these, you know what to do. Got that subscribe button down there. But this is it. So these videos are coming at you raw, unedited, uncut, unfiltered. But yeah, that's it. So this is Definition of a Sniper. My name is Blake, Forex Money Flipper with 10 Talents Trading, and I appreciate y'all, and thanks for watching. Zoop.